Have you ever really thought about it? The money in your bank account, your salary, your savings, are they actually there? I know how strange that sounds. But what I'm about to tell you might feel a little uncomfortable, because that money isn't really sitting in your account. The illusion of money. Yes, you heard that right. That money doesn't actually exist. If everyone went to the bank tomorrow to withdraw their savings, the system would collapse within an hour, because the bank simply doesn't have that much cash. And this isn't a bug. It's how the system was designed to work. It's been this way for centuries. It's called fractional reserve banking. Banks lend out money they don't truly have. And we call the digital numbers assigned to our accounts our money. But it's not. It's part of a carefully maintained illusion. An illusion we've all been living in. The beginning of the trick. Back then, when people thought of money, they thought of gold or silver. If you were wealthy, your chest was filled with shining coins, but carrying that treasure was dangerous. So people began to entrust their gold to goldsmiths, men who had secure vaults. In return, the goldsmith gave them a receipt, a note showing how much gold was stored. Over time, people realized something. They didn't need to carry the gold itself. The paper worked just as well. And that's when the goldsmiths noticed something else. No one ever came back for their gold all at once. Most of it just sat there untouched. So they had an idea, a dangerous one. If they had 1,000 coins, they could issue 2,000 in paper receipts and no one would know. They began lending out those extra receipts, charging interest. They were making money from gold that didn't exist. And that moment changed the course of the world's economy forever. The birth of modern banking. It wasn't just a clever trick. It was a turning point in history. When people started treating paper as valuable as gold, money broke free from reality. Banks took that idea and built an entire system around it. Governments followed. In 1694, the Bank of England was born, not to serve the people, but to save a kingdom drowning in war debt. The bank lent the crown far more money than it actually had in gold, in exchange for interest. And those debts weren't repaid with treasure from new conquests. They were paid by the taxes of ordinary citizens. Money no longer represented wealth. It represented debt. And the system worked so well that it's still the same today. Governments borrow money that doesn't exist, and we keep paying for it with the labor of future generations. The American illusion. America wasn't any different. Its banks printed money backed by gold, but soon they printed more than they had. When people rushed to withdraw their savings, they discovered the truth. There was no money. Banks collapsed overnight. But the system wasn't abolished. It was reinforced. Central banks were created to make sure people kept believing, even when the money wasn't really there. Because as long as belief survived, the system could too. The modern version today, things are much more abstract. You deposit $100 and think, my money is safe. But the bank keeps only a small fraction of it. In the past, that fraction was 10%. $10 stayed, 90 went out as loans. That money moved again, deposited in another bank, lent out again, and again. By the time the cycle ended, your $100 had multiplied into almost 1,000 circulating in the system. But most of it isn't real. It's debt. The only real money is the first $10. The rest is a digital promise, numbers on a screen, existing only because we all agree they do. No more reserves. In America today, reserve requirements are zero. Since March 2020, banks haven't been required to hold even a single dollar in reserve. That old 10% rule is gone. Now, what limits banks isn't cash in a vault, it's regulation. Rules written in a place called Basel, Switzerland, by central bankers and technocrats you didn't elect. These are known as the Basel Accords, the invisible leash of global finance. The system that governs how money moves is no longer controlled by nations, but by those who write the rules. The strings of the world's money are pulled by unseen hands, how money is really created. Banks don't lend from your deposits anymore. They create loans first and money after. When you take out a mortgage, the bank doesn't hand you cash from a vault. It types numbers into a computer. And just like that, new money is born. That money exists only because you owe it back. Today, more than 90% of all the money in circulation isn't printed by central banks. It's digital money born from debt. And that's why every financial crisis is really a crisis of confidence. Because when debt can't be repaid, the money itself disappears. Consequences. This system creates three inevitable consequences. First, inflation. Because the same money keeps getting multiplied through loans, each dollar loses a bit of its value. Prices rise and your savings quietly shrink. Second, endless debt. Every new dollar is born as someone's debt. And because of interest, that debt can never truly be repaid. The cycle has to keep going. Someone must always borrow more. Third, concentration of power. Banks earn interest on money that never really existed. Governments use debt to fund wars, welfare, and bailouts without directly raising taxes. And the wealthy, who own real assets like land, stocks, and commodities, see their wealth rise as inflation pushes prices higher, while ordinary workers watch their wages lose power year after year. In this system, the winners never change, and neither do the losers. The collapse of the illusion. Throughout history, the system has always collapsed in the same way. 1929, the Great Depression. 2008, the housing crisis. People panicked and rushed to the banks, but the money wasn't there. Vaults were empty and trust vanished overnight. Governments printed trillions to keep the illusion alive. Because without that illusion, the economy stops. Money is a story of confidence. And when confidence fades, the story ends. The global picture. Today, America, Europe, Canada, and Australia all run on the same system. Only countries like China and India still hold higher reserve ratios, but even they operate under the same Basel rules. Wherever you live, the system isn't held together by cash in a vault. It's held together by rules written in Basel, Switzerland. The heart of global finance doesn't beat in one country. It beats at that table, in Basel. Why debt keeps the system alive. Here's the uncomfortable truth. If people stopped borrowing, the entire economy would collapse. If everyone paid off their debts tomorrow, the money supply would vanish. Banks would have nothing left to lend. Commerce would freeze. The system needs you to spend, to borrow, and to believe, because you are both the fuel and the collateral. Every loan, every swipe, every signature gives the illusion one more breath of life. If debt stops, the system stops. History repeats. History has told the same story again and again. The goldsmiths of the Middle Ages, the bankers of 1929, the financiers of 2008. Each found new ways to multiply money that didn't exist and convince the public it was real. Every crisis ends the same way. They patch the system, rebrand the illusion, and move forward. Each time it becomes a little more complex, a little more global. But at its core, it never changes. It's still built on belief. The real lesson. Money itself is not wealth. True wealth is land, knowledge, skill, and creation, the things that hold value when paper promises fade. Debt is not harmless. This entire system is built upon it. And inflation isn't an accident. It's a feature of the design. Every year, you're forced to run faster just to stay in the same place. So, measure your wealth not by the numbers on a screen, but by what you can build, learn, and sustain in the real world. Awareness, not fear. This isn't a message of panic, it's a call to awareness. Don't cling to the numbers in your account. Focus on real value. Create something that belongs to you. Don't live as a prisoner of a system born from other people's debt. To understand money is to understand freedom, and to see the system for what it is to finally step outside it. Final reminder: history always repeats the same warning. When belief dies, the system collapses, and belief is the easiest thing to lose. Next time you check your bank balance, remember this. Most of those numbers are just digital illusions, not reality. But if you stay aware, the system can't consume you. See the trick, and you can protect yourself. Ignore it. And in this game, the house always wins. History doesn't just tell us where we've been, it whispers where we're heading. To understand money, power, and debt is to see the structure we live inside. True freedom begins when you recognize the value that exists beyond it. Every generation has made the same mistake, trusting money and forgetting their own strength. But now you know better. Real wealth isn't found in digital numbers. It lives in work, knowledge, and independence. This story wasn't told to frighten you, but to wake you up. Because awareness is the first step toward freedom. History will repeat. But you don't have to make the same mistake again. If this story gave you a new perspective, don't forget to like and subscribe. History is still the best teacher for those who choose to see.